Validea's modified all-weather portfolio is a portfolio and strategy designed to perform well in all different types of economic seasons or environments, but also utilizes a trend following overlay to further reduce downside risk and volatility. The key fundamental investing insight behind the strategy is this. Investors can construct a portfolio that performs well in varying economic conditions, including both high and low inflation and high and low economic growth, using a combination of uncorrelated assets. Furthermore, a trend-following overlay protects more to the downside when each asset class breaks down and goes into a bear market. Our modified all-weather portfolio will follow the same strategy as the all-weather portfolio, but with an additional twist. The all-weather portfolio invests in U.S. stocks, intermediate and long-term bonds, commodities, and gold. It is considered a simple form of risk parity since it overweights lower-risk bonds relative to higher-risk assets like stocks and seeks to even out each asset class's contribution to the overall portfolio risk. This strategy also uses a trend-following overlay on the individual asset classes, so it has the ability to move out of each asset class if in a downtrend, and if no asset classes are on an uptrend, it will invest 100% of its assets in short or intermediate-term bonds. As for the source and the evidence behind the strategy, the all-weather portfolio is a simplified version of the risk parity-based all-weather fund from the leading hedge fund Bridgewater Associates and its founder Ray Dalio. Since its inception in 1996 to the end of 2019, Bridgewater's all-weather fund has returned an average 7.8% per year. The investment thesis behind the strategy is this. The combination of uncorrelated and different asset classes and weightings provide the portfolio with the ability to do well in almost any type of economic season. The objective is to generate steady returns with limited risk and drawdowns. By incorporating trend following, there's even more potential for downside protection, as asset classes in downtrends are removed from the portfolio, further protecting the investor from large market declines. Okay, let's take a look at the modified all-weather portfolio. As I mentioned, this starts with the all-weather portfolio, which is a strategy that has been talked about in the writings and interviews of Ray Dalio from Bridgewater Associates. To start, the strategy looks at 5 different asset classes and combines them together. The portfolio will use U.S. stocks, long-term treasuries, intermediate-term treasuries, commodities, and gold. What the model then does is it allocates across the asset classes based on the risk level. So, for U.S. stocks, the portfolio will have a 30% allocation. There'll be a 40% allocation to long-term treasuries, 15% allocation to intermediate-term treasuries, 7.5% in commodities, and 7.5% in gold. Finally, our modified version uses a trend-following overlay. So what this has the potential to do is remove the asset classes that are in a downtrend, and the portfolio can effectively go to 100% cash if all asset classes are in a downtrend simultaneously. However, the trend following also guarantees a disciplined buy trigger back in once an uptrend is reestablished. The modified all-weather portfolio is an interesting spin on the all-weather portfolio and strategy that has been followed for decades by one of the leading hedge funds in the world, Bridgewater Associates.